Good morning, everyone. Behind me in the screen, you will see the Slido.com that you can enter your questions during our sessions. Welcome to this enlightening session of Unlocking the Mysteries of Cash Management, Daily Dynamics, Modern Structures, and Future Skills. My name is Nantia Protogeraki, and I have the privilege of moderating today's panel. Cash management is a critical aspect of any business, influencing everything from daily operation to long-term strategic planning. As we navigate through rapid technological advancements and evolving market conditions, understanding the dynamics of cash management becomes more vital than ever. To start us off with a light note, let's take a look at this fun illustration. What people think that treasuries do. The CEO thinks that we are saving the company. The CFO thinks that liquidity is not a problem among many. Our colleagues see us drowning in spreadsheets. Our family thinks that we are staring numbers all day. And, of course, our friends think that we are working remotely from paradise. But in reality, we are managing the company's financial health. We are fortunate to have with us a distinguished panel of experts who will share their insight and experiences. Iliana Angelaki, Head Secretary and Board of Director member. Kostas Apostolidis, Incoming and Outgoing Payments Senior Manager at OTE Group. Alexandros Bellos, Treasury Director at PVH and Board of Member on HAT. And Vasilis Mitropoulos, Senior Manager at Ernst & Young. Each of our panelists has the knowledge to help us thoroughly discuss today's topic. Without further ado, let's dive into our first topic, the daily dynamics of cash management. Iliana and Kostas, could you please share your insights on what are the most critical day-to-day functions of a corporate treasury in managing cash flow effectively?
Okay, let me start. I'll say that the first priority and our first task in the morning of every treasurer is to check our liquidity. So we need to make sure that we have a concise cash balance monitoring report. We need to make sure that the balances that we have there are available cash balances, because there might be cases where this cash is in a time deposit or in a collateral. Then we do the second priority, in my opinion, is cash forecasting. We need to have a clear understanding of our flows, of our inflows and our outflows. We need to have, in order to be able to make sure that we can meet our operational cash needs. We need to be accurate on that specific cash flow, and in order to do that, I think it's very important to track variances so that actual versus forecasted values, in order to make sure that at the end of the day, we maximize this accuracy. Now, another priority, I think, is liquidity management. Again, in the day-to-day task of a treasurer. We need to optimize cash management to minimize our borrowing costs and to maximize our returns from short-term investments. This will also help us determine which financial tools we will be using in our day-to-day, whether that would be credit lines, that would be bond loans, or time deposits, or longer-term investment tools. And this will also determine the flexibility of these tools. Now, last but not least, and certainly not a day-to-day function, it's rather a core function, it's strategic planning. We must have strategic planning in our day-to-day in order to be agile, in order to be able to pivot accordingly with daily changes of the business. A structure, the strategic planning will provide us a structured approach in order to be able to align the company's financial resources that we are ultimately handling with the financial strategies of the company. Kostas, would you like to share more of the operational day-to-day?
Yes, of course. I would like to add more on the operational part, on the operational efficiency, on regulatory compliance and the strategic use of technology. On the operations part, every effort is being put, and if you don't do it, then you should, on automating as much as possible all the procedures that could be automated, and in the collection side, use all the most modern and most efficient collection methods that can be offered to the customers. And especially when you have to do with millions and millions of transactions, then you need to have the most efficient way to recognize in an accurate and timely manner these collections. You need to have procedures in place, written down regarding payments and regarding reconciliations, and to do regular audits to make sure that everything is in line. Very strong bank account management and very structured, not too few, not too many accounts to be there to provide agility and flexibility to the commercial part of the business, but at the same time, try to reduce the administrative burden on the back office of the Treasury. You need strong connections and relationship with banking partners. And on the intercompany part, there is some specific attention that needs to be put there in order to meet with all the transfer pricing regulations. And having said about regulations, I'm coming to the compliance part. We need to adhere to meet all local and international rules and regulations like the Know Your Customer or anti-money laundering or tax legislation that may differ substantially between jurisdictions, between different countries and everything. And this is not only to avoid any potential penalties and so, but safeguarding mainly the reputation of the company, to the trustworthiness of the company. In this regard, you need to have internal controls put in place as rigid as possible and try to stick with them and audit them and on a regular basis review them because reality changes and so the internal controls need to be adapted as well. All of these processes and procedures, in order to be optimized, we need to use technology. And there are complex technologies offered and less complex ones, like treasury management systems that unify all the data and all the transactions in a unique platform and provide a single source of truth. But lesser complexity, RPAs, robotics that can automate repetitive tasks. All the modern and digital services that are offered by our banking partners should be used, because in this way you optimize the cash liquidity, you increase transparency, you reduce risks, and whatever we said there, safeguard the financial health of the company. This is what we should be doing. If you are not doing, you should be.
Thank you very much for your thoughts. Very insightful. Now, let's continue to our next question for Vasilis and Alex. How have modern treasury structures evolved? Could you elaborate on the exact functions including regarding cash management and discuss the benefit and challenges associated with these structures?
Okay.
You're going to start?
Okay, I will start. So I would say that the existence of a distinct cash management unit in the Greek companies, I think, has been a necessity the last years. I think this involvement is a result of the effects of the complexity in the markets, the effects of technology and the need for Treasury to have a more strategic role in supporting decision making. I think that the case we often seen in the Greek companies where one or two people were sitting in the accounting department, performing some tasks relating to basic cash monitoring, executing the payments, administrating the bureaucracy, the paperwork of the bank is no longer the case for most companies. I think that this was evident last year as a result of the survey that EY held with the support of the association, where 9 out of the 10 participants stated that there is a distinct cash management team within their company. And this usually is sized 5 to 10 FTEs max. Also, what was interesting as a result of the survey, I think, was the fact that half of the participants stated that their team supports the provision of Treasury services to other companies of the group they belong. So they exploit the opportunities and benefits that I would say a centralized structure could offer, mainly I would say in terms of better visibility over cash and liquidity, and perhaps negotiating more favorable terms with their banking partners. Now, when it comes to structure and responsibilities, I would say that the team is tasked with the daily cash monitoring, mapping the inflows and outflows of funds, and ensuring that the company meets its daily obligations. In some companies, we see that the team also works to optimize, I would say, the return on any excess cash balance, by making, I would say, decisions on how to invest the excess liquidity in short-term financial instruments or term deposits. Cash management teams also are tasked with cash forecasting processes, but I would say mainly for the short-term period of 1, max 3 months. For the medium and longer term, this is usually not a process that is the responsibility of the cash management team, but I would say other teams have the ownership within the finance department, usually the FP&A team. But I think there is a strong collaboration with the cash management unit to provide inputs. We often see also payments to be a task of the cash management team, and also the relations with the banks. Mainly with what has to do with the daily interaction with the banks, different issues that the company has on a daily basis, and acting as the first point of contact when it comes to new product offerings. Another area where usually cash management is involved is the credit operations, mainly in terms of monitoring the aging of the customers and supporting the trade finance processes. I would say, for me, the biggest challenge currently the teams face is the technology. It seems that the teams are not exploiting in full the opportunities and benefits that technology has to offer. I mean, in the companies, there is the increased awareness of the need, but there is hesitation to invest, mainly due to the cost associated with investment and the lack of the specialized knowledge of the different technological options that are there and which could better fit the business model of the organization. So as a closing remark, I would say that for me, technology would be the turning point that would influence further the structure of the cash management teams and also what role they play within the organization. Okay.
Great, thank you, Alex.
Yes, certainly technology and banks for me are key in this whole treasury structures topic. The innovations that have been brought by banks and treasury vendors, fintechs, I think over the years they have allowed for more efficient, centralized structures. Technology can be utilized everywhere in your every daily activity, from cash positioning, short-term cash forecasting, payments, cash allocation. Yeah, on this front, from my experience, I have seen great value from the utilization of treasury systems and treasury vendors. On top, we have the available banking products that they're out there. They can make our life, a treasurer's life, for cash management much easier these days. So especially in certain countries in Europe where there is less legal and tax restrictions, there are products that they can prove very viable in managing cash. Indicatively, I will mention cash pools, either notional or physical in-house banks, payments on behalf of collections on behalf of virtual accounts. All these can prove very useful. So personally, from my experience that I have working for a multinational company and having utilized cash pools in house bank and of course also TMS and other treasury vendors, I have seen great benefits. One is in cash centralization. And maximization of liquidity. So nowadays, no matter the structure that you're gonna do, you can almost have your cash every day wherever is needed. So liquidity is maximized. On top, and then as a consequence of this, the interest expenses are being reduced because you can use the cash that you have, and the interest income is maximized. So if I think, on the other hand, for payments, in-house bank payments on behalf of, nowadays you can have a global company and you can have one single platform where you have one process, less administration. You can use your multiple banks and deploy, which is very powerful. Last but not least, of course, I'm going to mention the time savings that all this is bringing, because you are sitting, or you can be sitting in a structure where it's partially automated or almost automated, so you don't have to deal with day-to-day stuff like doing an intercompany payment, going in every single portal and just do the bank administration. So all this stuff are very viable. So now on the downside, all what I have described is it requires time and requires money. Yes. So it's a challenge for the treasurer to convince the CFO or the decision maker to give this money. So it's on the treasurer to make an analysis and do a compelling business case. Yes, so that make it at least as appealing as possible for the decision maker to say yes. We know that doesn't always work, but we can at least try. Yes. Last thing that I want to mention, that in all these structures, because you require some time and investment, once you get the approval, it's very important to bring in different parts of the organization from the beginning, so that you can get to the optimal structure, meaning tax, legal, IT. All these people, they need to be involved and have their say. Exactly.
Great insights. Thank you, Alex. Moving on, Iliana and Alex, could you address which skills and mindset are necessary for treasurers to effectively manage the company's cash?
Okay. I'll start with some skills that I think are important for a treasurer to have. I think number one are the communication skills and the business partnering skills. We are in contact, we need to be in contact with our banking partners all the time. And we need to hold very strong internal relationships with all the corporate teams. In my opinion, and I think everybody agrees, the treasurer is the enabler in a business. We need to be very close with our commercial teams in order to support them in accomplishing the company's goals. At the same time, we need to make sure that all risks are mitigated. So another part of our skills is our risk management skills at the top of the list. Now, there are some practical skills, so we need to be technically proficient in Excel. It's in our everyday life. It's still there. We need to be able to handle large data sets. This has become evident in the last years. We need to be tech savvy, and we always need to be updated on new treasury systems and new treasury software and tools that will help us in our everyday life, and that it will help us. All these systems help us automate our processes. And I think that today we're going to cover a lot of those. We're going to get informed about them, and get updated on what the market has to offer. And I think we also need to have some leadership and management skills in order to build strong teams and to be able to influence some decision making, as Alexandros already mentioned. So I think that's it.
Okay.
Anything to add on the...
Yeah, I think that I agree with everything what you would say. If I can speak about the mindset, I would say that a treasurer needs to be strategic thinking, forward-looking, and focusing on the long-term value. On one side, needs to understand the strategy of the company and the business needs, and at the same time, they need to be able to be up to date in areas such as macroeconomics, developments in the financial world and the banking world, and but also what's happening with the technology. You know, what fintechs, what treasury systems, what treasury vendors have to offer these days. So all these are very helpful, so that and are very helpful. On top, you need to have a business partnering mindset. So a treasurer has a specialized knowledge and skill set that can add value in different parts of the business. But it's a little bit the mindset, like a treasurer needs not to sit down and wait for the request to come and then just provide their knowledge. They need to go out there, connect, establish the networks with all the different stakeholders, and be there to be seen as a trusted partner. So I have seen in my organization, other organizations, there's many times that there are decisions and made without the involvement of the treasurer, and this has resulted in not optimal results. Other than this, you mentioned technology, and it's always you know, a key word. A treasurer needs to focus on efficiencies, and they need to be out there, as I mentioned in the beginning, to know what are the latest technologies, what is out there, because our goal is to do business partnering, but also to provide quick, granular, and accurate information. And certainly, yeah, technology helps with this. One more thing that I will mention is the critical thinking and the ability to translate business needs into actions is very important. So also for cash management, but in general, every request, question, everything ad hoc that comes to your table needs to be assessed from cash management, tax, legal, operational perspective. So you need to think about it. On top, speaking with different parts of the business within a corporate, everyone speaks their own language. And the treasurers also speak their own language. So it's a good treasurer's job to be able to understand what is being asked and translate it into treasury actions. Last thing I'm going to mention is the flexibility and the adaptability. We all know that corporate strategy and the way we work can change from one day to the other without necessarily consulting with Treasury. So we need to be able to adapt and move forward.
Thank you for your thoughts. Finally, for this section, Vasilis and Kostas, in what ways can the Treasury functions contribute to the overall financial health?
I start, okay. So I would say that Treasury has evolved to a strategic partner, is evolving to at least to a strategic partner of the company, meaning traditional Treasury was viewed, I think, as a cost center, as a transaction processing-oriented function with limited scope, and it did not receive, I would say, any proper investment in technology and infrastructure. But I think the role of Treasury has evolved the last years. I mean, it's still the custodian of the cash. It still ensures that the company has enough liquidity to meet its obligations. But it's not just that. I think as shareholders and analysts are increasing their scrutiny over a company's cash performance, disruptive technologies, changes the role of Treasury and how it performs its role within the organization. So CEOs and CFOs are expecting from Treasury, I think, to expand from its traditional boundaries and take on a more broader leadership role to act as, I would say, the stewards of the enterprise cash. So in that sense, Treasury comes to support and align with the CFO objectives, I would say, to improve profit loss bottom line and balance sheet effectiveness. So it engages to a number of activities that could produce potential savings for the organization on the one hand and create value on the other hand. For example, treasurers try to reduce the cost of the treasury operations. They try to improve control and visibility over cash. They try to decrease the volatility of P&L through the implementation of improved risk management strategies, improve the efficiency of working capital and cash, and decrease, I would say, the cost of capital. So at the end of the day, I think Treasury must be able to ensure that the cost of funds of the organizations are competitive when compared to other companies, I would say, operating in the same industry, that the company has the appropriate balance between cash, liquid or illiquid assets, and finally, to be able to measure accurately value-based KPIs that achieve the enterprise, I would say, wide goals.
Thank you. Kostas, what's your thoughts?
I would just add to that in the way I view it is the most important part that gives the Treasury the strategic role that we are seeking is what Iliana mentioned before, the strategic financial planning. To what brings to the table is the insight from the market, whether it has to do with the interest rate fluctuation or the economic cycles or the financial forecasting, and to bring that insight that would elaborate on the discussion when the capital allocation is being the decision is being made, and then to be able to make informed decisions. I would agree, working capital management is one of the key pillars that very strict management of receivables and payables is of crucial importance to allow for the generation of free cash flow, which is the oxygen of the company, to be able to pursue the objectives of the company and all the growth opportunities, or even reduce any debt burden that the company might have. In this regard, you need to have access to capital at all times, and in order to be able to have access to capital, you need to have strong partners. Strong partners are the banks and all the institutions that are necessary, and the network that is necessary to get access to that, regardless if the market is in tranquility or is it in volatility, or even worse, if it is in distress. And you need to have this proactive way of collaborating with your partners in order to have all the financial instruments in place and in good fees, and all the setup to be in place, and when you need them, to be there and not looking after solutions on the final moment. We had the negative opportunity of living that during the past decade, during the crisis. From where I come from, from OTE, we had all the right instruments in place with our banks. When the markets were closed, the Greek banks were here to support us, and we thank them for that during that period. And the other part that is crucial for the strategic role of the Treasury is what I said before, and I will repeat that, is the compliance and governance, risk management, to be able to identify risks early on and mitigate early on, be proactive, and adhere to all the rules and regulations that elevate the image of the corporate into the market, into the investor world, and in the shareholders. Trustworthy and reputation should be at the highest level, and the Treasurer can play a pivotal role in that. So this is it.
Thank you very much for your insight. Now, we do have time for a quick question from the audience. Let's see the slide. Should treasurers be involved in the working capital process? Kostas, let's begin with you.
Yes, well, definitely. Most, I would not be, any short on that. We had the experience during the crisis, within the OTE group. We took the initiative within a period of 3 to 4 years. We initiated more than 70 different projects in receivables and payables, and less on the inventory side, that was developed over 5 countries, 5 different NAPCOs there, and we tried and we achieved, we generated a surplus or savings of more than 130 million. So in times where the whole market is in such a turbulence, to be able from internal operations to safeguard such kind of amounts, it's rather crucial. So, you know, it's absolutely necessary.
Great, great. Vasilis, do you want to add something?
Okay. I will add just three things. I would say, yes, certainly Treasury must be involved in the working capital process. The first thing I would like to say is who knows cash better than the Treasury team. So they're in the position to say what is the optimal level of cash that the company should hold, not too high to have idle cash, not too low to risk insolvency. The other dimension is the financing options, meaning that the Treasury maintains the relationship with the banks and the financial institutions, so they know better, they have a good visibility over the different products that are there and the options that are there. So they are able to assess, for example, credit lines, trade finance products that could be used to smooth out any cash fluctuations. And finally, as said before in the skills, Treasurer should be a good communicator. So it should be in the middle of the process, among the discussions with the operations, sales, and procurement, to ensure that there is an integrated and consistent approach over, I think, managing working capital across the organization. Thank you.
Thank you very much. Your perspectives are very valuable for us. Thank you to our panelists for their valuable insight and to everyone on the audience for your active participation. We've covered a lot of ground today, from the critical day-to-day functions of cash management to the evolution of modern treasury structures and the essential skills required for the future treasurers. I hope you find this session as enlightening and informative as I did. Now, I leave the floor to Iliana to explore how can automation and technology enhance cash operations and what are the key technologies that treasurers should focus on implementing. Thank you.